Hello, I'm Peter Towers, Managing Director of BIZTOOls. Welcome to our Accountants Minute podcast. In this podcast, I'm commenting on the material that we've produced in edition 399. We're getting very excited about the next edition of Accountants Minute. Will be our 400th since we started these articles quite a few years ago. What I want to talk to you today about is your roadmap to premium advisory services. Have you started yours yet? Are you accepting that things are changing in the accounting and bookkeeping professions? I can assure you they are. So let me just give you an overview of some of the items that are affecting accountants. Advising a growth-focused client is one of the most rewarding activities an accountant can be involved in because you're using a wide range of your skills. Sure, that client's going to need some taxation advice, but if they're growing, they probably need advice on a whole range of other issues first. So when a business gets into this mood that they want to scale up, they want to grow, where do you fit with them? Are you going to say to them, no, we can't do that sort of work? You have to go and see another accounting firm now, but we're quite happy to continue to do the tax return. Or are you going to enthusiastically indicate to the client that your firm has geared up to be able to help a smaller company that wants to grow, that wants to scale up? Now, you probably won't be the only professional advisor that's involved in this process, because those sort of clients need input from marketing, technology, AI, software, legal, people as well. And what you need to do is to be able to work as a team. But I think accountants are ideally placed because of our training, our meticulous of keeping records, to be able to lead this charge. But the important point that I want to stress to you is you must be a leader, not a recorder. Because when your clients are scaling up, they're wanting you to be part of the futuristic team, for you to be looking at what their ideas are for the future. The past has gone. Sure, someone's going to prepare a set of financial accounts. But if you've adopted the type of philosophy that I'm going to discuss with you today, you've got a very good idea of what the results have been because you're doing weekly performance and profitability reports. You know how the business is going. All that the monthly financial accounts are doing, as important as they are, is proving that the weeklies were accurate. Because growing companies need to be relying on their weekly reports. Because a month's a long time when you're a fast-growing business. You need to know that you're getting sound information throughout the month. So you need to be the leader. You need to forget all about being the historian of past events. You need to be a storyteller. You need to be able to look at the business plan and the predictive accounting reports, the budgets, the cash flow forecasts, the key documents, and then the cash flow forecasts and the projected balance sheets, and be able to communicate to your clients, to articulate what all this means so that they understand. You really can be the storyteller. And then as they discuss this and want to make some changes, just part of the strategy, you can make them and show them what the new forecast is going to be like. A bit similar to an architect who sits down and talks to a client how they want to design a house or their building, and then draw sketches and designs. It's all futuristic. Business activities are futuristic. And as a profession, we have to be geared up to help them. Now, obviously, some of our professional colleagues do that, and they do it quite well. But this is where the opportunity lies, to be far more proactive in this area. But to do all this, we've got to lay some foundations. We've got to lay down some systems within your organisation to start with, so you make sure that the system continues to deliver, whether you're there driving it or not. And that's difficult. First of all, you need to plan the systems. And then you need to embed those systems and those concepts into your client's business. Now, I don't know how many fast-growing businesses you've worked with, but it can be an exhilarating ride at times, and it can be a wee bit frustrating when we're from a profession that's wanting to dot I's and cross T's, and you've got a CEO that's going off at 1,000 miles an hour in two directions at once sometimes, it seems, and you're trying to be the guiding force. You're trying to make sure that the risk analysis has been considered, that the future cash flow implications of every decision are being looked at, they're being documented, and that risk strategies have been implemented where necessary, and that enough time has been spent in giving consideration to some what-if questions. What if it doesn't work? What's the fallback position? Because I've never known of a fast-growing company that gets every decision right. They don't. They make mistakes. Or the market doesn't accept what they're saying. But we need to be with them. We need to be able to answer their questions. I was the Chief Financial Officer and Company Secretary in a listed public company that was involved in the meat industry. It was boom times in the meat industry. A lot of things were happening. We were operating in Queensland, New South Wales and Victoria, so things were going on everywhere. And the CEO was thinking at 1,000 miles an hour and probably going in three directions at once some days. And he used to fire questions at me throughout the day. Pete, can we do this? Peter, what would be the result if we did this? Can we have a costing exercise looking at changing how we're operating this plant? And so on. Now, no one will ever convince me, in fact, I know the truth of what I'm saying, that the same type of questioning doesn't go on in the operator of an SME, especially one that's scaling up and wanting to get bigger in the market, wanting to be more successful. Who does that person ask? If you're already being asked the questions and you're supplying the answers and your client's thriving, well, you know what I'm talking about. But these people who are leading these companies need input. In larger companies, they've got an in-house person. I was the Chief Financial Officer. I had a team of accountants that were working for me. Not all in head office, in the regional offices that we had. But we used to make sure we got the information back in. And I wanted them to be able to do the same sort of support work that I was performing with the CEO, with their area manager. Because the CEOs and the managers are the leaders of the business. But they need to get input from their key team members. And that's what the role will be that you're playing in this overall innovative journey. It can be exciting. But let's get back to these foundations. The first thing I think you need to do is to make sure you really understand what your client's business is all about. you need to undertake a due diligence review. I've worked in both camps. I've been the senior partner of an accounting firm. I've been in a listed public company. And I know that I knew a lot more about the business when I was in the listed public company than what I did bar about 3 or 4 of my company clients as a senior partner in an accounting firm. Because there's a lot of information I didn't need to know. And in fact, the reason I knew it in those 3 or 4 companies is I was also involved with them. I was the company secretary. I was involved. You need to know the nuts and bolts of the organisation. You need to know the risk analysis has been carefully looked at. You need to understand the processes for placing orders, for receipt of stock, who checks it in, who verifies it was received, who signs off for the payment to be made, who are the customers, how are they making payments, what's the debtors' days outstanding, who looks at that? Or is it only looked at when the bank manager rings and says the overdraft's too high, and then there's a great panic? Businesses need systems, but they need some monitoring to make sure they're operating. And if you're going to be playing this sort of role, which I think you've got to be, because this is the future of accounting, there is no doubt in my mind at all that this is the future of accounting. And I'm going to share a couple of recent comments with you during this discussion. So we need to undertake the due diligence review so that you understand your client 1 inch wide but a mile deep. You need to dig down to understand who the characters are in the business. What's the agreements that have been made? Who has various components of the intellectual property? Is it all stuck up there in someone's head? We need to get it documented. The next stage is to have a business plan. Now, I don't mean you just go into your back room and over the weekend write a business plan. That's a waste of time. I wouldn't do it. I know state government sponsored that type of business planning concept 25 years ago. I must admit, I did a little bit of it, and then I pulled out. I said, no, I'm not going to do these projects. $2,000 or something to do a business plan, and you hardly spoke to the client. Didn't know anything about their business half the time. All you knew was what type of business they were in. That was no way to do a business plan. And it didn't work. So we need to do a business plan, which means that you sit down and talk to the leadership team. What motivates them? What drives them to enthusiastically get out of bed a morning and be in their factory? Sometimes they're in there at 5 a.m., 6 a.m. I had a CEO that used to ring me at 5 a.m. He was on the road. I used to worry about him, to be honest, because I'd been talking to him on the phone at 9, 10 o'clock at night. And here he is ringing me halfway on a 60-kilometre journey at 5 a.m. But they're motivated, these people. And we need to understand that and work with them. So the business planning process is important. Sit them down. Go through the checklists that are contained within the ESS BIZTOOLS product package. Write it down. Get their views. At times, they'll have an argument. Try to work out what the consensus is. Take the draft document back to them. Let them go through it. Let them debate it again. Sometimes they'll be a bit sarcastic. I didn't say that. Well, yes, you did. You need to sort it out. But the important thing is at the end of the process, they should sign off on the business plan and they have ownership of it because they are the team that have to implement it. You might be part of that team, but there's normally 4 or 5 other people that are part of that team. They've got to have ownership of it if it's going to work. We need the predictive accounting reports that I referred to earlier, the budgets, the cash flow forecasts, the key drivers. The key drivers are the sub-accounts of those important items that some people hide when they do budgets. It's the inventory of raw materials. It's the inventory of completed stock. It's debtors, it's creditors, it's capital expenditure, it's work in progress. It's research and development activities. There can be some high cost items in those items. We need to see them clearly identified so that they can be monitored at least every month. What's the debtors' days outstanding? What's the WIP figure, and what's it relate to the scale that it was input at? Is it getting too high? But people not raising invoices. Why aren't they raising invoices on work in progress? I found over the years one of the reasons work in progress doesn't get invoiced promptly, and it can be just sit there. It can be a couple 100,000 stuck in work in progress. It's always that figure. Because in there's a job that there's a bit of a disaster on. And the foreman or the manager of that section knows that. He doesn't want to face up to the grilling that will come if he produces the invoice, and suddenly you might be highlighting, gee, we lost $40,000 on this job. How did that come about? So they tend to want to pad it with a job that had a good return. So when it goes through, it's lost because, oh yeah, we made a profit that month. But there might have been a substantial loss in one of the activities, because losses mean that you can get information. I think every loss or every diversion from what the expectation was should be investigated. That's what I learned in the meat industry. Find out why, because the CEO wanted to know. So after he cracked me round the head a few times, sort of thing, on the lead up, I got wise about that. Every time something didn't meet our expectations, I made sure my team had the answer. This is why it happened. Because a good leader wants to know so that he can fix the problem, so it doesn't occur again. Not to shoot people, not to abuse them, but to find out what caused the problem. We're dealing with human beings. We're dealing with machines. We're dealing with technology. We're dealing with a lot of things that things can go wrong. So we need to identify the problems. The art of management then is to fix the problem. That's why they get paid the big bucks. But the art of being a virtual chief financial officer is that you become the key source of information as to what went wrong, to be able to analyse the figures and give the report back. And at times you have to stand your ground. Other times you've got to concede you might not be quite right also. But in the main, you should be confident in your figures and prepared to debate it. Because senior executives can be very powerful people in their own right in an organisation. And sometimes they don't like to accept they might not be right all the time. So you have to be able to make sure your calculations are correct and then stand up. Because you're not doing anyone any good by just caving in and saying, oh, yeah, well, you're probably right. And then 6 weeks later, you find out the problem's grown gigantically. And then someone's likely to turn around and say to you, well, why didn't you tell us it was a problem? So you can't be wimpish in any of this. So you need to know your organisation. That's why the first thing I've referred to is 1 inch wide, 1 mile deep. And you do need to know where the secrets are. And some businesses really do have some secrets. So this whole process is enabling you to become the storyteller, to be able to work with the leadership team on the business plan, the projected financial reports, the cash flow forecasts, etc., the projected balance sheet, and then to be able to say to them, this is what this business is going to look like in 3 years' time. Is this what you want? And the answer might be no, we don't want that. Well, let's go back to the drawing board. You gave me the figures, you gave me the projections on these various business operations. You told me you wanted to open a brand new warehouse, and that warehouse is going to cost $1.4 million to build. And we decided to borrow that money rather than go to the crowdsource funding, equity raising, and raise some more capital. because you didn't want to water down the current shareholders, including you, leadership team members. You didn't want to water down your shareholding. So you need to make sure that all points of view are being presented. You are the storyteller. Now, not all storytellers or not all stories come out with a wonderful result. Sometimes the story comes out with something that's not quite nice, but it's the truth, or it's what happens in the world. Unfortunately, the world's not full of lovely stories all the time. So you need to stand your ground and to say, this is the result. And that way you will become a great executive and your client will perform far better because they'll be informed. The 52-week business enhancement system is the next item that I've got in my notes to talk to you about. And this is very important because this is daily, weekly, monthly. Daily, weekly, monthly. That's how businesses operate. They don't operate on the basis that they work month, 12 months of the year, and then for 2 days they look at various things like an annual set of accounts and a tax return. That's rubbish. That's not how businesses operate. And if they operate that way, that's why a lot of SMEs are getting into difficulty. And with today's technology and today's communications using Zoom, like we're doing here, there's no excuses. We can supply those resources. And I'll assure you that the talent attraction and talent retention problems that you're probably having, because every accountant I talk to in Australia keeps on telling me, someone told me an hour and a half ago that there's 40,000 shortage in accountants in public practices. Told me there'd been a report prepared. I'm not surprised at that. That's why there's so much work getting outsourced, but we need to make sure that we've got capable people in organisation, in the accounting firms to supply the services. So the 52-week business enhancement system is important. And the most important thing there is the weekly report, because this is what really runs the business. When I was in the meat industry, we even trialled a daily profitability report in a major export meatworks. It had a couple of thousand people working there, and the CEO said, we're doing special orders. I'd like you to get the team to be able to calculate daily. Well, we did it. Some were working pretty late and early mornings, but we did it. So that daily report. So management could see if they did it this way, that was the result. If they did it another way, and that's what was happening. They were changing the process that they were utilising to see if there was a better way of doing something. Experimentation. That could be something that you want to look at. But the weekly profit and performance report, I think, is the most important document that's prepared. Because a week's a nice time. It's in most businesses, it's 5, 6 or 7 days trading. We call it the end. Close the business on the Saturday or close the business on the Sunday. And then within 2 days, you've got a report. Now, there's a bit of guesswork in some of the things. You've got estimates, but you've got an annual budget. If there's been a special promotion on that week, you know what that's going to cost. So it's just not sitting there and blindly following what we did last week. You need to look at what's been happening. The fact that sales went through the roof might be because there's been a massive TV program, so there's a massive bills coming from somewhere. You need to make sure that's reflected in the weekly profitability report. And this has just been smart, being aware of what's happening in the business, not being an historian. We've got to be in the front. We've got to be a leader in the front, someone seeking to create history, not to record it. So the weekly performance reports are very important. And then analysing the key performance indicators and the business metrics. It amazes me that people don't understand them. And a lot of your clients also don't really understand them. I had a situation 25 years ago where a new client came to me, been suggested by his lawyer, you want an accountant that works with businesses very well, go and see Peter. So he came and saw me. And he proudly told me that he'd been the managing director of a listed public company, which he had, and he was going to buy a business, which was a big supermarket type business. I said, okay, and he went through a few things, and do you understand? Oh, yeah, I understand this. I've run a public company. Now, he told me that 3 times, so off he went. And about 6 or 7 weeks later, I get a phone call and said, well, can you come over and see me? I've got a problem. So when I got there, I said, what's your problem? He said, my bank balance is going down. And I don't know why. Look at all this stock. So his shelves were full. I said, well, aren't you making sales? Oh, yeah, well, look, here's the amount. We've got a lot of money, but obviously the bills are higher. So okay, well, let's go through. So I said, well, how do you price this stock? Because I started analysing. We sat down and did a P&L, and the gross profit percentage was pretty low. I said, hey, what are you marking this stock up at? And he'd confuse markups with gross profit percentages. He had it all back to front. He'd been the CEO of a public company. And I said to him, this is all wrong. We offered to do this for you. He said, oh, I'm going to get you to do it now. He said, I've just realised that in my public company, I had an accountant that did all that for me. I often wondered what he did, but I said, well, he had a role to play and he did it properly, apparently. But you didn't. You didn't understand it. But you're smart enough to know that something was wrong. Your bank balance was going down. So we then put in a system of key performance indicators and metrics into that business to keep it going properly. I queried a couple of his staff who I didn't know, why didn't you tell him that he was the cheapest in the market? And he was, miles cheaper. And she said, oh, he told us he knew everything. He'd been the CEO of a public company. So this is one of the problems. You might have to be alert to some of your clients. Make sure they're not overconfident in things. Make sure they do understand. Because he had carried on like that. So I ended up having a real man-to-man discussion with him over a couple of hours, but I got the message through to him. He also had to have his team members on side. If they told him he was too cheap, especially women who do most of the buying in this sort of store, were telling him it was too cheap, he should have been standing back and saying, oh, I don't understand that, but I'll get on the Towers and his team, they can come over and have a look at it for us. But they never did. Okay, meetings. Oh, another crucial thing in a business is the rhythm of meetings, because it's how information gets conveyed. Not everyone likes it, but some companies have breakfast meetings for their leadership team every day. Every day. And if you can't attend, you come in on the phone from wherever you are. Green Cross, well-known veterinary surgery business and pet food shop owner that ended up a top 200 ASX company. Glenn Richards, the managing director of that company, indicated in a session that I was involved with that every day they had a breakfast meeting, 7:30. They ate their breakfast, they discussed what the issues were yesterday, and they went out to challenge the world for that day. Now, there was 8 or 9 people on that leadership team. If only 4 or 5 could be there, that was all right. The others come through on the phone, wherever they were. Think about it with your clients. Breakfast meetings don't suit everyone, but it's important, I think, to have that short, sharp meeting, 5-10 minutes, with the leadership team and possibly some of the other teams. And then the weekly meeting to look at the results. And then monthly meetings are very important to look at the financials, because you should then be really examining where the cash flow is going. What's going on with debtors? What's the debtors' days outstanding? So that's the preliminary overview as I see it, that we need to get the systems right in the business. Within the ESS BIZTOOLS product package, we've then got a whole range of other material to assist you, like the business planning tools, the management accounting templates, key performance indicators, etc. The early stage innovation company. We've got detailed working documents to help you do that. It's a great way for young innovative companies to be able to raise capital because the government pays a bonus to the investors. Have you ever heard of anything like that? Not many people have, I must admit. It's the early stage innovation companies. It's the greatest secret around town, but it's legitimate. If you've got a client that wants to invest in one of these companies, they get 20% of their investment, up to $10,000 bonus for a retail investor and $200,000 for a sophisticated investor off their tax bill. And if they can't use it straight away, it just carries forward. But they also receive a capital gains tax exemption on those shares if they hold those shares for longer than 12 months and less than 10 years. So you say to yourself, well, why is all this occurring? Well, it's occurring because the Malcolm Turnbull government was very keen to help young, innovative companies to be able to raise capital. So they decided the government would pay an inducement. And it's still there. No one's changed that legislation. It's still there. But I'm amazed at the number of accountants look at me and say, you fair dinkum. I've never heard of that. I didn't know it worked like that. But that's how it works. And we've also got crowdsourced funding equity raising. If your client's got a turnover of less than $25 million on a worldwide basis, they could raise up to $5 million in the next 12 months. And again, the next year if they want to, and the following year if they want to, without issuing a prospectus, without going through all the rigmarole of going on the stock exchange. Yeah, some of them might want to go on the stock exchange, of course. But there's a system now that with crowdsourced funding equity raising in Australia that's quite legal. It's been set up by the government. And there's been about $450 million raised. I think there could have been a lot more raised over the last 8 years if the accounting profession had got in and understood crowdsourced funding equity raising and also early stage innovation company. So that's my challenge for you today. There's a lot of opportunities out there to do very creative work. But we've got to remove the shackles of just thinking about tax. Tax is important, no doubt about it. But you've got to run the business properly first to qualify to be paying the tax. Please think about that. Your client really needs to have the systems and the processes so that they can scale up and grow into great businesses that you will be very proud of, that you'll be able to sit back and have a quiet ale and say, well, I helped that company at the beginning, because some of them will outgrow your firm. There's no doubt about that. But by the meantime, you've got a reputation in the marketplace. You will get other clients to replace them. Unless you decide you want to grow. You may decide you're going to leave your accounting firm and go off and be the full-time CFO of that growing company. That's a choice that you can make in the future. If you've got any questions or comments, please send me an email, peter@essbiztools.com.au. Stay safe. Have a great day. Goodbye.